If you've ever traded the London session, you know it can feel like a total roller coaster. But what if there was a method to the madness? A clear, repeatable framework to anticipate those big moves? Well, today, we're going to break down the 4 primary intraday profiles that ICT uses to do exactly that. All right, welcome to AI Explains ICT. In this video, we're doing a deep dive into the ideas from Core Content, Month 8, Episode 5. And trust me on this one, you're definitely going to want to grab a notebook, because the details we're about to cover are game changers you'll want to come back to again and again. So here's the game plan. First, we're going to build the foundation, the key building blocks you absolutely have to know. Then we'll get into the specifics, the 2 distinct sell profiles, and then the 2 buy profiles. And to wrap it all up, we're going to put it all together into a simple, powerful trading framework that you can actually use. Okay, before we even start talking about specific buy or sell patterns, we have to understand the context. We have to know what the market is telling us leading into the London Open. These next few concepts are absolutely crucial, so let's get into it. First up is something called the Central Bank Dealers Range, or CBDR for short. This is just the price range that forms between 2 p.m. and 8 p.m. New York time. You can think of it as the market taking a breather, just settling down after the New York session closes. A really tight consolidation here is the first major clue we're looking for. And right after that, we get the Asian range, which runs from 8 p.m. to midnight New York time. Now, just like the CBDR, what we really want to see is a narrow, sleepy, consolidated range. See, according to ICT, this tight action is like a coiled spring. It allows liquidity, stop-loss orders and entry orders to build up above and below the market, which basically sets the stage for a really explosive move later on. Now, this concept right here, this is the secret sauce. The protraction stage, which is famously known as the Judas swing. This is a fake-out move, plain and simple. It's an engineered move against the real direction the market wants to go. And its whole purpose is to trip stop losses and trick traders into getting on the wrong side right before the true powerful move kicks off. So when I say a tight range, how tight are we talking? Well, here's your first hard number. For what ICT calls a classic high probability setup, that central bank dealers range should be less than 40 pips. A pip, if you don't know, is just the smallest price move in Forex. So a range this small is a fantastic sign. If it's much wider, that's a warning flag that maybe this particular profile isn't setting up today. And then for the Asian range, we want it even tighter, ideally somewhere between 20 to 30 pips. This shows a real lack of energy, a true consolidation. When you see both the CBDR and the Asian range this compressed, you've got the perfect baking ingredients, so to speak, for one of these classic London setups. All right, let's move on to our first set of profiles. Assuming your higher time frame analysis is telling you the market wants to go down, that your bias is bearish, here are the 2 main scenarios you should be looking for during the London session. So you've got the normal sell profile and the delayed sell profile. And the key difference, the only thing that really separates them, is super simple. It's all about the timing of that Judas swing. Does that fake rally designed to trap buyers happen right after midnight, or is it delayed until 2 a.m.? That's it. That's the question you need to answer. For the classic London normal protraction sell, the rules are very strict. It's like a checklist. First, your higher time frame bias has to be bearish, non-negotiable. Second, you need those perfect conditions we just talked about. CBDR under 40 pips, Asian range between 20 and 30, and third, this is the fingerprint of the setup. Price has to start rallying immediately after 12 a.m. New York time. This rally is what creates the high of the day, usually between 2 a.m. and 4 a.m. And this picture shows that exact scenario perfectly. You see the consolidation, right? Then boom, right after that 12 a.m. vertical line, the price shoots up. That's your Judas swing. It's sucking in all the hopeful buyers right before the floor drops out and the real move down begins. But what if you're watching at 12 a.m. and that rally just doesn't happen? What if the price just chops sideways or even drifts a little lower? Well, that's your cue to start looking for the delayed sell profile. The logic is identical, but that protraction stage, the Judas swing rally, doesn't kick off until 2 a.m. New York time, or a little after. You'd then look to short that smaller delayed rally. And here's what that delayed profile looks like. Notice, after 12 a.m., nothing, no big rally. Instead, the market just waits. Then, right at that 2 a.m. marker, it stages a little rally. That's your delayed Judas swing, and it's your opportunity to get short before the price continues its path lower. Now that we've nailed down the sell-side logic, the buy profiles are going to feel like a walk in the park. Seriously, we're just going to take everything we just learned and flip it completely upside down. And it should be no surprise, just like the sell profiles, the normal buy and the delayed buy are separated by one single factor: timing. Only this time, instead of a rally, we're looking for a decline to trap sellers. Does it happen right at 12 a.m. or is it delayed until 2 a.m.? So for the classic London normal protraction buy, the rules mirror the sell side exactly. You need a bullish higher time frame bias, you need those tight CBDR and Asian ranges, and the absolute key: an immediate drop in price right after 12 a.m. New York time. This move down engineers liquidity below the market, forming the low of the day before the real expansion higher begins. This diagram shows it perfectly. Price consolidates leading into midnight, and then bam, it drops right after the clock strikes 12. That is the Judas swing, grabbing all the sell-side liquidity from the breakout sellers before the true bullish move takes over for the rest of the session. And you guessed it, if that 12 a.m. drop never happens, we start looking for the delayed buy profile. Price might just drift sideways or even a little bit up after midnight. The signal you're waiting for is a new decline, that delayed Judas swing that begins at or after 2 a.m. New York time. That's where you would look to buy that retracement into a discount price level. And here is the visual confirmation. See? The 12 a.m. move is basically non-existent. Then, right at that 2 a.m. marker, price takes a dip. This is that delayed protraction stage, offering a potential buying opportunity before the market continues its bullish move for the day. Okay, so we've covered 4 different profiles, which might sound like a lot to keep track of, but this is the best part. ICT condenses all of this information into a remarkably simple time-based framework. Let's see how this all clicks together. This right here, this is the main takeaway of the entire video. You can simplify your entire London session analysis down to 2 checkpoints in time. At 12 a.m. New York time, you ask yourself one simple question: is the market moving against my higher time frame bias? If the answer is yes, you are potentially in a normal profile setup. If the answer is no, you do nothing. You wait. Then, at 2 a.m., you ask the exact same question again. If the move against your bias starts now, you're looking at a delayed profile. It is truly that straightforward. And hey, don't just take it from me. As ICT himself puts it, if you anchor your entire analysis to these 2 time-based characteristics, your criteria for trading London becomes incredibly simple. You're not guessing, you're not predicting, you are simply reacting to what the market is showing you at very specific key times. And that wraps up our breakdown of ICT's London session intraday profiles. If this video helped you, please do us a favor and hit that like button and subscribe to the channel. If you have any questions at all, drop them in the comments below and a real human will get back to you. Safe trading out there.